The RBI has cut the repo rate by 25 basis points from 6.25% to 6%. Projections now show more confidence that headline inflation will stay close to 4% target over the next 12 months. Real GDP growth for FY26 is projected at 6.5%, Q1 at 6.5%, Q2 at 6.7%, Q3 at 6.6%, and Q4 at 6.3%. CPI inflation for FY26 is projected at 4%, against 4.2% projected earlier. Q1 at 3.6%, Q2 at 3.9%, Q3 at 3.8%, Q4 at 4.4%. As of April 4, 2025, India's foreign exchange reserves stood at $676.3 billion. Standing deposit facility rate under the Liquidity Adjustment Facility stands adjusted to 5.75% and the marginal standing facility rate and bank rate to 6.25%. The financial system faced tight liquidity over the last 2 months. With RBI's measures, it is now at a surplus of more than 1.4 lakh crore. Personal loans. The differential in risk weight between unsecured and secured loans has been restored to 25%. Additional measures. It is proposed to enable securitization of stressed assets through market-based mechanism. This is in addition to the existing ARC route under the Securitization and Reconstruction of Financial Assets and Enforcement of Security Interests Act 2002. Current co-lending guidelines apply only to banks and NBFCs for priority sector loans. To tap into the full potential, it is proposed to extend these arrangements to all regulated entities and all types of loans. Gold loans secured by jewelry are extended by regulated entities for consumption and income generation. To align guidelines across entities, comprehensive regulation on prudential norms and conduct will be issued. To align regulations for non-fund-based facilities across regulated entities, RBI plans to issue comprehensive guidelines. Additionally, instructions on partial credit enhancement will be revised. It will help broaden the funding sources for infrastructure financing. The other two announcements involve empowering NPCI in consultation with banks and stakeholders to set transaction limits in UPI for person-to-merchant transactions and making the regulatory sandbox theme neutral and on-tap. Separate directions will be issued for implementing these measures. In conclusion, the domestic growth inflation trajectory demands the monetary policy to be growth supportive, while the RBI says it will continue to watch inflation.